Hi everyone, welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Sagar Agarwal, who is the co-founder of Beams Fintech Fund, which is a fintech-focused growth capital fund offering ecosystem, value add, and capital support to fintech founders. Hi Sagar, welcome to ELI.
Hi, Priya. How are you? Thank you so much. Much appreciate this having me over.
I would request you to introduce yourself to our audience, please.
Sure. Is it right to call you Ranjan or Priya
Yeah,
or what would you? Priya. Okay, perfect.
yeah.
No, great. Thank you once again for having me over. Myself, I've been now in the private equity venture capital industry for nearly 15 years. Right. Been part of 3 funds during my life, during my career, during my journey. Managed, advised, led, co-led nearly $400 million of deployed capital
Mm-hmm.
across 33 investments during my 15 years of journey.
Okay.
Started my journey like a typical Indian growing up in Bombay, aspiring to join IIMs as their MBA, the next option, right? Graduating from my commerce and MIMS college. Did a consulting gig for a year at a firm called NetStripes India. And then post NetStripes, did my master's from SPJN, which is Singapore Dubai firm, and then headed to a firm called Evolvence, where I spent 12 years over there, nearly 11 and a half years over there, and then 1.5 years at NMI. So nearly 13 years of private equity venture capital experience, just doing it with other firms, right? Or investing as a senior management team partner at other firms. And then the calling was there. The market in India was right for fintech disruption. I could visibly, having been investing since 2006-7 onwards, all the way till 2019, 2020, I could visibly see the changes in the market landscape over there. And it was very clear to me that there's a need to create a sector-focused, dedicated fund for India, right? And the opportunity was there for that. And that's why the entrepreneur calling in me was there. And time to create your own fund, go out in the market, build a platform, right? So that's the way I was thinking about it from day one. And then 2019, when the 20, which is when my second fund, third fund got over, which is when I moved out to create this platform. Joined hands with venture capitalists as a group.
Okay. Tell us in detail about Beams Fintech Fund in terms of how what all companies you have invested in, what is the size of the investment and all.
So Beams, interestingly, we're building India's first growth stage fintech fund. Yeah. There is, if you look at the VC landscape in India, there are a lot of early stage fund managers out there in India, right? But very few growth stage managers and very few sector focused managers, right? And if you go double click on that further, there's no fintech focused fund manager out there in India. There's a lot of guys in the US and European markets, right, who built large platforms, $1 billion AUMs, just into doing the fintech space over and over again, right? So taking a step down in India, the opportunity for India is huge. Financial services is a large market, right? Fintech is a large part of financial services market. It's growing really fast. So looking at all the opportunities in the market, right? Fintech made the most sense. I've been looking at financial services investments for nearly 15 years now, starting with 2006-7 onwards, right? So my expertise, my passion lied in investing in financial services. So we created this fund, Beams, to focus on not just investing capital, Priya, but creating the ecosystem around the fund. So you're not just the venture capital manager, you are actually a fund manager who has a strong ecosystem of value add for the portfolio companies that you are investing in, right? So taking a step further, Beams will launch with the idea of raising 900 crores as the first fund. Along with our co-investors, we could potentially do 150 to 1,000 to 1,500 crore investments. We'll do anything between 75 to 80 crore check in each company. Along with co-investors, we'll write 100 to 120 crore per company. And in a span of 3.5 years, we'll deploy into 12 investments, right? So we'll deploy roughly $150, $180 million across all these 12 investments. Will come in only growth stages because it's a growth stage fund. When I say growth stage, it is only Series B and Series C. In India, somewhere Series A becomes very, very early growth. Series B becomes early growth, I would call it, and C is really where the growth is actually happening, right? And then D starts getting into late, I would not say late growth, but still slightly higher growth, right? So that kind of puts the spot a little bit later for us. So Series B and C is the right spot in India, where we're gonna, I would say the risk-adjusted returns is the highest in this category for all investor class for that matter. And then pretty much thought process behind how do we select teams within fintech, how do we select sectors within fintech, and double click on them and become an industry expert, right? And invest in those teams and sectors that we believe strongly in. And that's why we are investing in these 36 teams and sectors that we've identified in the fund, right? So very simple $120 million fund, along with co-investor $150 to $180 million, $10 to $12 million per company. How we're going to invest 12 investments in the fund, growth stage investing, right? Series B and C rounds, and creating an ecosystem to add value to the portfolio companies.
Gotcha. Speaking of portfolio, can you name some of the renowned fintech startups which have received funds from you, which are backed by you?
No, so absolutely. So Beams as an avatar is relatively new. It's been 6 months, right? Since the Beams officially launched. As a group, we've backed Bharat Pay. As a group, we've backed Dukaan, we've backed Impact Guru, we've backed Lending Club, Liquid Loans, right? From Beams, we've backed the first company that we've invested in is a company called Neo, which is a leading digital banking platform in India. And now we're doing the second investment from the fund. So out of 12 investments, 2 investments will be completed by June 30th and 2 more by September
30th. Curious to know, how do you, India is a very high growing market for fintech. A lot of fintechs are coming up, and the reason behind it is the market is not well penetrated. So long roadmap for growth. But there's a lot of fintechs out there. How do you shortlist the fintech company to invest in? What do you look at while shortlisting or selecting a company?
So good question, Priya. It's very important from a fund perspective, right? What's your thesis look like? And why are we investing in a few companies, right? I think what we've done, Priya, is we've done a very top-down, bottom-driven approach towards investing. Right? So we've identified first the segments within fintech that we like, right? We've identified 36 themes within fintech, or 36 segments within fintech that we like. And in each of these segments, we've identified the top 3 market leaders in these categories, right? So that's the first criteria and the filtration we create, that we look for in our themes that we want to invest into. And this themes have come from the approach, looking at the macro, looking at the 10-year journey of the whole fintech landscape for the next 10 years, financial services. And we've identified themes which are going to stand out in the next 10 years, right? And we've chosen those themes and we've gone and identified top 3 companies in those themes. So like this, we've created a portfolio shortlist of 108 companies in the fund already.
Okay.
So when we have a shortlist of 108 companies, right, then we start looking at each of these companies and saying, where are these companies in the journey, right? Who's the founding team? What's the business model the company is building? Where does the product market fit look like? Where is the founder business fit look like? Where is the revenue today, right? How fast these companies are growing? What are the moats and the entry barriers the company has created, right? How scalable is this business model? Where is the 10-year journey of the company look like, right? How are the founders thinking about the vision of the company? And what is the exit potential of this investment, right? What are the returns we could potentially generate? What is the entry price that we are entering into? So all of these factors come together for us to pick and say, hey, this investment based on the shortlist that we've done of 108 companies, this stands out the most. This is where the company is doing really well compared to all other players in the market in that team itself, right? So that allows us to pick and choose companies accordingly.
Okay. So now one fundamental question I have, if you look at India, the reason fintech is growing so much is that there is a huge potential, lot of big portion of the market is unpenetrated. But traditionally the banks and all the major BFSI groups, they have targeted to the top 10% or the first 100 million users of India, and that is how the market has been. Even today also, you can say it's not it's still at the same stage that it was 5-10 years back. A little improvement, of course, but why India is such a under penetrated market? What is the fundamental core thing that makes India the way it is right now?
Interestingly, if you look at, I think for us to understand the opportunity landscape, right, you have to look at it from a top-down perspective and then double click on some of the items, right? So let's look at from the financial services perspective. The financial services today globally, including India, is one third of the economy, right? It's a backbone of every economy. It's a one third of the GDP of the every
Yeah,
country in the world, right?
yeah,
So nearly $1 trillion comes from directly, indirectly, not necessarily directly, but indirectly, almost $1 trillion of the economy comes from financial services. Right?
right.
That's the importance of the sector.
Hmm.
And it's also a sector which also represents very strongly in public markets.
Hmm.
If you look at any public market indices globally,
Hmm.
almost 30 to 35% to 40% of the weight of the index comes from financial services space,
Yeah,
right?
yeah.
So those are two important things which define the significance of financial services.
Hmm.
Now, it's also a sector, Priya, which is not a winner-take-all market.
Hmm.
Right, because financial services, you have multiple banks, you have multiple small finance banks, you have multiple public sector banks, you have multiple cooperative banks, then you have NBFCs, you have insurance companies, you have asset management companies, distribution, broking,
Hmm.
multiple investment opportunities and companies are there in the market.
Okay.
So it's a not a winner take all market. It's a 35, 40 year old industry, right? And that industry continues to grow regularly year on year for the past 30, 40 years in India. Right. However, if you continue to look at the penetration, Priya, of mutual funds, insurance, retail participation, stock market, credit card, government bank account, lending to consumers who are economically weaker section of the society or low income group people, low middle class group people, or if you start looking at lending to micro entrepreneurs, right? All of these continues to be below subpar, right? Below 10% in India. So large sector, large part of the economy, right? Large part of public markets, not a winner take all market, yet the penetration continues to remain low and been growing for so long, right? And that's the challenge, that the opportunity is large for anyone to come and capture, right? So that's from that perspective. And if you look at fintech, this penetration journey is somewhat going to be covered from the less than 10% to say 15, 20% over the next 10 years, 15 years by a combination of traditional businesses, but also a combination of new businesses. And the new technology-led businesses will enable these companies to capture the remaining market share, or at least increase the penetration. Right? India is a 1.4 billion population. Pre-COVID, I think 50 to 70 million people were active on the internet regularly, right? Because it was a forced transition for people from 2016 onwards. So in 2016, three things happened in India, right? COVID happened, demonetization happened in India, Geo was launched in India, and UPI was launched in India. So you gave people effectively the first opportunity to go online at a cheaper cost of living, right? So the internet was made available free and cheap by Reliance. So 16 was a pivotal year. In 6 years, 50 to 70 million people went online, really, and started spending money. COVID was a natural inflection point 2.0 in India, which is where the second set of people started going online.
Yeah.
Right? And if you think about it, your parents are online, your grandparents are online, your kids are online, pretty much everybody's online today. So the population set from first 70 million people is now 140 million people.
Yeah.
Right? It's almost doubled in a matter of 2 years' time. So if we are producing 100 unicorns, the first 50 to 70 million people online, imagine the amount of outcomes we can produce from 140 to 150 million people online, right? If you think about the US population, 350 million people, roughly 250 million people online, very actively spending money online, very actively. We already had 150 million people. Yes, the paying capacity could be different from the US market, but our paying capacity is gradually improving, right? So we are very bullish from a 10-year perspective that the number of people going online will be much higher. We'll be at 200 million people by the end of this decade, right, which is 2030. Second, the GDP per capita of India would be north of $4,000 at that point of time, $4,000 to $5,000, whatever that number looks like, right? I think roughly precisely $4,000 is where we would be, right? Which is puts you in one of the top 15, 20 economies of the world. Third, the penetration of financial services continues to remain low, which will be fintech captured market share in a way, or fintech complemented market share, right? So those three things will make fintech a very, very attractive sector and will make a fintech a very large sector from a 10-year perspective. Today, fintech is 10% of financial services, will be at least 25% of the financial services market 10 years down the line.
Okay. You spoke about some themes, about 13, 14 themes that you categorize in for the fintechs. So speaking of themes, almost 80% of the fintechs today are just front ends of the traditional BFSI business, and they focus a lot on simplifying user onboarding and acquiring customers at a cheaper cost. Uh, but there are some other unique fintech companies. They're solving, they're creating their own niches and solving unique problems that were not catered by the standard banking and BFSI model. So can you highlight which are some of those interesting fintechs that you are seeing today that are solving some real problems that were not solved before?
No, so I think a lot of, on the face of it, looks like a lot of it. So, like, I'll tell you first, answer to your question categorically on a lot of fintechs are front end facing platforms, right? Solving for customer experience and acquisition. I think in the front for a lot of people, it looks like that's the case, right? But if you take a step back and look at what these companies have built, right? A lot of these, especially the digital banking platforms like Neo, right? They have not just a customer acquisition platform. They've done a deeper integration with the core banking solutions of the banks that they're partnered with. Right?
Okay.
So now they don't only act as a front-end platform, but they act as a customer journey platform. So
Okay.
the day the customer chooses Neo as a banking platform and the corresponding bank at the back as a platform, then what happens to that customer for the next 3 years? From his bank account to his current account to his savings account to his fixed deposit to his insurance to his wealth management to his spending to his purchasing, debit card, credit card, forex card, all of that becomes the journey of the customer. So if you start thinking about product journeys and the customer life cycle, you're not thinking about just lending or a payment. You're thinking about what can I do for this customer? If he thinks of me as a bank, can I provide him end-to-end solutions? Right. So that's the way the companies are building and thesis, and that's why we invested in Neo also for that matter, right? It's not a front-end platform only, it's actually a complete digital banking platform where you can do end-to-end without having a banking charter.
Okay.
That's the way we think about some of the fintechs that are solving problems, right? Then there are themes like the agriculture finance, large category in India, right? It's an $800 billion industry, farm to fork industry. Talk about B2B commerce, it's a $400-500 billion industry, right? Commerce is still traditionally driven by manufacturer, distributor, retailer, stockist, super stockist in between, right? Traders for that matter. A lot of this industry is completely offline. Agri-import industry completely offline, right? So a lot of these industries will require digitization, which will happen through payments, which will happen through lending, which will happen through insurance. So a lot of those are getting embedded into the traditional journey of these businesses, agri, health, right? All of B2B commerce, education, logistics, all of these journeys, right? So that's unique sectors, more specific to India, more specific problem to India, where companies are innovating at scale and solving the problem. That's one sector that we are very excited about, which is the agri, health, we call it embedded finance, right? Then the themes that we really like is that today, I don't know whether you're aware of it or not, Priya, but a bank uses 400 vendors today on an average.
Okay.
Every bank uses 400 vendors today on an average. Each of these vendors provide one infrastructure service, which is critical to the bank.
Okay.
A lot of new age entrepreneurs are coming out and building better infrastructure, right? And they're competing with this existing infrastructure and saying this is a monolithic infrastructure, this is an old infrastructure. Today's generation and today's business model requires a lot more nimble bank, a lot more agile infrastructure. So they are coming and replacing some pieces of this. That's a large enough opportunity. Out of 400 vendors which are providing 400 different services to the bank, imagine the investment opportunity that you have in those 400 categories. Right, from KYC, onboarding, fraud management, compliance, AML check, factor compliances, for that matter, GST compliances, filings, right? All of this bank requires on a regular basis. Okay. So all of the onboarding of the customer, all of those journeys are fintech in a way. Similarly, if you think about the large, medium, and small enterprises, that's another theme that we really like. Where a lot of enterprises use payment platforms. They use expense management solutions. They use HR payroll management. They use accounting solutions, account receivable and payable management, supply chain management. A lot of these are, again, fintech solutions. So, I mean, if you did double click on fintech within theme, you realize that it's a lot more deeper than just acquisition of customers or building a platform for a bank, right? Or payment, lending, and insurance. There's a lot more deeper into each of these categories.
Got you. So now removing the finance guy's hat and putting on the investor's hat, let's talk a few things about the investment fundamentals of startups. So tell us, when you invest in a startup and you have committed the capital, what are the other things you do as an investor to the startup in terms of mentoring, building network, or any other aspects you help a startup in?
So, as a ecosystem fund or a value add fund, right?
Mhm.
We have taken a step forward, Priya, and built a platform where we're bringing more and more banks, more and more NBFCs, more and more fintechs to come and become our investors, right? So when they are investing in our fund, we allow those investors and allow the portfolio companies to cross-pollinate with each other. When
Okay.
you cross-pollinate with each other, you can co-create products, you can
Mm.
do technology integration and partnership. You can obviously larger institutions can lend to growing institutions at the same time, right? Build a balance sheet together, do acquisitions together. There's a lot more things that you can do, right? Classic example of Centrum and BharatPay acquiring PNB Bank and PNC Bank and acquiring a license around it, right? So a lot more collaboration can happen, and that's the value that we bring to the table. We are not saying that we will help you with hiring or we'll help you with operating costs. We are saying we'll actually help you with tangible value in a business. We are bringing more and more banks, NBFCs, fintech partners to come and cross-pollinate. You want to build new products, you want to build new technology, we'll help you with that, right? You want to understand the market better, we'll help you with that.
Mhm.
So those are some of the ways that we think about creating value for portfolio companies.
Okay. And what happens as an investor? You find out that a company you have invested in, and you see that the company is not going in the right direction, or the funds are not being utilized properly. How do you react to those situations?
Uh, I've had the first case during my 15 years, not the second case that the fund was not utilized properly. I think in both these cases, right, let's take one point at a time. One is what if the company doesn't do well, right, or our thesis doesn't prove out. I think the idea is that you have to understand where the thesis is going wrong
Hmm.
and where the opportunity is not working. Is it the execution challenge of the management team or the capability challenge that you've not identified, or is it the market challenge, right?
Okay.
If there's a execution and capability challenge of the management, then you try to fix that gap
Hmm.
by hiring people who can actually solve that problem, right?
Okay.
And if it's a market challenge, you need to understand if it's a solvable market problem or non-solvable. If it's a non-solvable market problem, you need to change the business model.
Hmm.
And if it's a solvable market problem, you need to identify the gap and solve that gap, right? So it's at every point of time, we think about founders. We think about founders first. How do we help them understand their gaps and fill that gap?
Hmm.
And that's when a company which is underperforming end up performing because you solve the problem for them, right? You enable the founder. Our job is to continue to provide support to the founder.
Okay.
Whatever he needs, right? Let him explain. He understands the business better than us.
Hmm.
That's one aspect of what we try to do if the business doesn't go in the direction that we want it to. We try to make it more enabling environment to experiment more
Okay.
and identify the gap.
Hmm.
On the situations where money is used somewhere else, we've not seen that happen. I think fundamentally everybody's here to create business model for themselves and create a brand name and legacy.
Yeah.
No founder intentionally wants to move money out, right? And benefit others or not his own company, because this is where he's got the maximum equity, if you think about it, right?
Hmm.
Out of 100% of the company, he owns 30, 40, 50% of the company. If value badega, then that's the value creation is going to happen.
Yeah.
So generally, that's not the case. We try to look for founders who understands the value of this equity, right?
Hmm.
Who understands what this company will look like 10 years down the line.
Hmm. Okay. What would you say is the meaning of entrepreneurship for you? How do you define the term entrepreneur? Who do you say is a good entrepreneur?
It's a tough one, but I think we've got very, very inspiring entrepreneurs in India, right? I think some of them have built a fantastic companies, are large companies, right? Vijay Shekhar Sharma obviously is one of the poster boy of
Hmm.
entrepreneurship in India, right? For that matter, and Paytm is an investor. Vijay Shekhar Sharma is an investor with us, so obviously we admire him a lot. I think entrepreneurship for me, Priya, is not uh, defined by age, is not defined by time, it's not defined by anything else, it's defined by passion, right? If you believe in what you're doing, and if you believe in what you're building, and if you see the real value creation that you're doing in the ecosystem, right? And then you have all the passion and the power and the energy to go after it. That's when you create an outcome, right? And entrepreneurs out there to create an outcome, make change. We are all here to create a change in the ecosystem, right? We're not here to just be an incremental change in the ecosystem. All entrepreneurs come with a vision, passion, right? That's exactly what we're driven by. We want to create, like for example, Beams. We want to create Beams as the largest emerging market fintech ecosystem, right? Starting with India. But the idea is to bring more and more banks, more and more NBFCs, more and more fintech founders to come and join hands with us, right? And that's from a 10-year perspective, we become the largest ecosystem. So we are here for change. Most entrepreneurs' vision and passion is to change it, and in that journey, commercial returns could come through.
Okay.
And then ton of, as I mentioned, Vijay Sharma is just one example of it. I mean, Mukesh Ambani is just another example of it, right? At 55, he's innovating at pace. Geo today, everybody's using Geo, right? So that's a scale of innovation that we're talking about at that age bracket also, right? So it doesn't matter what you are, where you are, which part of the town you are. If you're passionate about something, that's what entrepreneurship is all about.
Okay. Due to constraint of time, I just have one question left. Let's say there is one future founder who is watching us, listening to us, and he or she wants to build a fintech platform. What kind of company or what kind of venture you want him or her to build so that he'll be able to raise funds from you? What would be a ideal way of building a venture so that he or she will be, or the venture will be investment worthy?
Wow, that's a tough one, Priya, but let me try and take that. I think there are a lot of interesting pieces in the fintech which are unsolved even today, right? And I think there's a lot of opportunity to keep building and innovating at scale. One of the pieces that I really, really like, and I think one should try to solve this problem, is cross-border payment space, right? A lot of us end up spending a lot of money in making international payments, right? For whatever reason, we're shopping, we're traveling, we're using money overseas, or we're remitting money, right? A lot of companies do end up, a lot of people, individuals do end up losing a huge amount of money in foreign exchange prices, right? And the processing fees, both between the two, we end up losing anywhere between 5 to 20% across emerging markets, right? Because of our own volatile currencies and because of our own weak currencies. I think somebody could come and solve this problem at scale where these currencies, right, or the charges that we end up paying towards cross-border payments, e-commerce, purchase, studies, right? All of that into one single ecosystem, that could solve a lot of problems. And it takes 3 to 4 working days to actually money to get credited, even today. Right? We talk about digital and we talk about finance, but we've still not solved the cross-border payments market. So I think getting T+1 credit, solving this at scale would be something that we would be very excited about.
Okay. Awesome. Yeah. On this note, I think we have come to the end of the session. Thanks for your time, Sagar, and best wishes for Beams Fintech Fund and all the ventures backed by it.
Thank you so much, Priya. Much appreciate this, having me over. I think it's glad to be on the platform, and thanks to you, for bringing all such entrepreneurs, different mindset, right? From a fund to a company to a different business model, right? So it's an interesting piece that you're doing and spreading the good word out there. So thank you so much once again. Looking forward to interacting in person as well.
Thank you, Sagar.
All right.